What up, what up, what up, what up, what up, YouTube? Welcome back to another major market breakdown. You'll kind of notice I'm not in my office because my son is comfortable in there and I wasn't trying to disturb him. So I was like, I'm just staying the video out in the living room today. So we're slightly on the informal side just a little bit. But DXY, let's get into it. DXY gave some stoppage right at the area that we were thinking it probably would with this little this swing high here, and it started to wick a little bit, and we may end up like pressing it a little more, even given this area a test up here, but ultimately I think we're gonna go ahead and roll over here with inflation having the slight uptick, and then if we come over here and check out the news for the week. So this is nah. Let's get back to current. Okay, Monday, not too much going on. FOMC member Barkin speaks, and then Tuesday it actually gets interesting. We have core CPI month over month for U.S. Um, and then also core CPI year over year. So these data reads are going to be big. Actually, also this ADP weekly employment change. So tomorrow morning is going to not tomorrow morning, Tuesday morning. Tuesday morning is going to be very interesting, and I think that's where we'll probably see the dollar start rolling over on that data print. So don't go into like Euro, USD, GBP, USD longs before we get that print. You dig what I'm saying? Because we gotta see how that's gonna print. Because that could push us higher. We could get a good print and it pushes higher. And then the Euro USD, GBP USD, AUD USD, those would then roll over in that case scenario. But I think that we will end up seeing. Uh, this is what I had set up. Let me get this volume out of your face. I set this up last week on the Friday, not the Friday, the Thursday episode. I don't tend to stream on Fridays as much. It's mostly like Monday through Thursday, but might start doing some closing bell streams on Friday. So be on the lookout for those. But I'd like this low to get broken one more time. Um, it honestly looked like a really good entry at the end of the week, but I don't like taking trades at the end of the week. So I was like, put the entry there, talk about it a little bit, give the analysis, but not actually take the trade yet. So I'd actually like this low to get broken one more little time, or at least matched. Give us a little discount, and like I said, regardless of what it does on open, I want to see the data print before I actually put my money in, because it's a heavy print, and then GU roughly the same. Um, yeah, I'd love to see. It's like that. This right here is technically a new low off of that, right? But that was that was like late December, not that long ago. Um, but with all of this here, with all of this downside here, for an actual buy, I would of course need to see DXY make that last high, and then this break this little double bottom on the 30-minute time frame here. Get a little closer so you guys can really see what I'm talking about here. Um, these wicks though make me really think that price does not want to be here, and it doesn't. It does not want to be here clearly. But I just really love to see one more low get broken before I just hop in there. Now, if price just decides to start buying and making formations higher, then we'll just wait for a pullback and get in. And that's really how I like to do that. That's precision trading for you. If you want just a quick one of the quicker lessons on it, we actually have a little bit of divergence here building up One another thing that we teach in the precision trading course is how to identify and really trade off of. And I mean, while we have the bias already, this is just an extra confluence here. We have um, this making new highs and higher lows, higher highs and higher lows happening in this little time span right here, and then we have lower highs and for the most part lower lows. All right, so that right there is hidden, not very hidden actually. It's all in your face, bullish divergence. So even though price decided to break lower again, like honestly, Euro super duper. I would love the break lower. GU GU I would be a little more confident in taking a trade on this level because of the fact that it showed some hidden divergence here, which is just another, like I said, just another confluence that goes into letting me know what's going on in the markets on the chart. So definitely gonna see some upside here, but we're gonna have to be patient about it because like we saw at the beginning of this video, there's a data read that we need to wait for. So gotta see how that U.S. CPI drops. If we get a good print, then the trade is a little less valid, and we'll probably have to wait a little longer. We get a bad print, which is what I'm expecting, then you know we're shaking and baking, people. We're shaking and baking. Let's take a look at gold. Um, since we're on the I didn't mean to type that. Since we're on the informal side, definitely gonna keep it a little bit shorter on the day, but no less value. I promise, no less value. This is so. I know it looks pretty, but this is not an actual trade that I was able to take. This is actually a completely missed entry. I was expecting price to bounce and then give another little ping and a whoop. Price just whooped up off of that first bounce, which is all right. I still do like the area, and if I'm gonna get in, like I would like it to be off of that area. Um, from a Fibonacci standpoint, and we are on the 30 minute. It is in the golden zone, um, roughly. If we get this here, I actually like it more on the downside than the top side of that fib. So gonna that's why I just moved that down there, just to be clear about that. So I'd like a it to roll over just a little bit. Give me an entry here just for another touch higher. Now, granted, I would only like to risk this area here for this entry. If it continues to roll through, which is it can do easily on this on this kind of short consolidation here. Um, I'd get out and then re-enter on a touch of this area, and then if that doesn't work and it rolls over, then I'll just be out once price kind of breaks this area here. And that's how I want to play gold. Gold has gotten, I'm pretty sure it's still a very strong reading on the edge finder. Let me see. Not as strong though. Not as strong. We're getting a +7 where we ended the week with a +9. So that could be that. I mean, that's most likely signaling the structure that we're seeing on the chart. With it rolling over a little bit, probably end up getting a good reading after it rolls over, and then it rise up, and that's where our trading happens. EUR Chef, very bullish though. I want to go take a look at that. Let's see what that is talking about. Um, that was weird. My laptop actually loaded slow one time. Wow, doesn't usually do that. So MacBook. Okay. Yeah, I mean, price action tells me that. I'll tell you that much. Um, new high, 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 new high, higher low, higher low, higher low. Um, we are ever so slightly. We did diverge, which may give us an opportunity to get in. So fundamentally, we're strong, but it's been losing a little bit of its strength, right? So since it's fundamentally strong, like the overall, you know what I'm saying, the overall direction is more than likely up. Um, but you know, traders trade, liquidity moves, and what goes up can't go up forever ish. It has to come back just a little bit so it can keep going up. That's just how these markets work. But like sort of like we were talking about before, it just kind of hints to structure moving forward a little bit. And I think it's going to give us an opportunity to get in since we know that it's been losing a little bit of strength. We could probably find an entry off of a short fib since it's very strong. It's probably not going to give us a super big um, pullback, but I'd say this 38 is nice. Um, Market likes it. It's tapped it a few times, and recently it's tapped it and bought off. Um, so yeah, I appreciate the 38 here, and I don't think price will have a problem buying off of it. If we get another touch. um, Granted, now if we just continue higher from here, because I always like to give multiple scenarios to make sure that like you can, because I mean you never know exactly what's gonna happen, but you do know that it's gonna be either up, down, or sideways, and we know how to react regardless. Sideways we don't do nothing. Up or down we trade. Simple. Now, price gives us a pullback. Tag that here and go on about our way to the upside. But if price decides to just break higher, which I don't think it's going to do because of the divergence we can see, but if price decides to just break higher, then we'll just wait for it because we do have a short term um, resistance here that pushes a little bit down. So if we get a break to the upside, and this where I am on the 30-minute time frame, so I'm talking about day trading right now. If we get a break to the upside, I just wait for a pullback to this broken area here, or at least around the 38 percent, depending on how strong the breakout is. But it's EUR chef, so you know it'll move, but it won't go too crazy on us. So wait for that to pull back, but not lose all of its momentum. So like if it actually starts to pull back into this area here, then it's not solid. So I would only really risk this area here on that pullback, because if we lose any more momentum than that, then it's not that's not showing strength. You know what I'm saying? So wait for that and then take it to the upside. But with a +9 on the edge finder, it's like oosh, oosh. It might do the upside one. it might be up first. With the +9. Let me let's switch gears a little bit and take a look at Nasdaq because that's what everybody likes to trade. Um, we were looking for a buy in this area, but it just continued higher and didn't give us any breathing room to get in on it, which is fine. I like to go on the slightly higher time frame with Nasdaq though. I love the 4 hour and daily candles with it because it's so volatile. You really gotta get that bird's eye overall view of everything. This right here is a short term, well, really more of a long term resistance. Once we break through this area here, I think we slip and slide to 28. No, I'm tripping. I'm blind. 26. I need my glasses. Nah, we definitely slip and slide to 26 100. And likely beyond. Now, granted, um, yeah, there's a lot of euphoria in the markets right now. Um, you know, investors are super confident. The market has done really great the past 4 or 5 years, and it's like it's easy to expect it to keep going. So I'm a little wary. I'm a little wary of that, and then like we're not getting any crazy signs. Don't get me wrong. I'm not a bear. I'm not saying we're gonna just fall off. But I am cautious at these levels right now because of how confident retail investors are. Uh, uh, how confident the entire market is as a whole. And I don't believe that AI is the same kind of bubble that you know like NFTs were. You know what I'm saying? I think it's similar to the .com bubble in a way, yes, but in a lot of ways, no. I think that there's in the way that the dot coms became mainstream, AI, is going to become a lot more utilized in mainstream, and it's not going to be the infrastructure that's being built for it now. I believe is what is needed long term, and that there's of course going to be a really big slowdown in how much money is being invested and cycled through in it. It's just we're going through a period of like rapid expansion in AI right now. So I don't believe it's gonna lose very much steam in the short term. Simply because like private like you can't even get any private equity right now if you ain't talking about some kind of AI. You know what I mean? It's like investors are hungry for AI, and that's just a fact. And we understand now that investors, hedge funds, private equity, super huge large companies is what really kind of run everything that's going on. So I like to follow the footsteps of the market makers. So that's where my ideology kind of plays into, especially when looking at markets like Nasdaq 100, which are super AI heavy, tech heavy right now. So I'm confident in the market, but I'm also cautious in this current environment. So I believe we break through this area here. We're smooth sailing, and then we got to talk about it again when we get up here. Now, if bears somehow just take us down from here, which I don't think it's gonna happen, then I don't think we'll roll over much than this area here and actually try again, right? But I could be completely wrong, and if price starts just rolling over, then we'll just wait for it to stop and consolidate because we don't catch falling knives because that's crazy. All right. Short and sweet. Not too short and sweet. It's actually 20 minutes. I thought I was gonna keep it short and sweet, but I end up, when we get into the markets, we all into the markets. You know what I'm saying? But if you guys haven't already, go over to let me pull this tab up here. Share this tab instead. Competitions. Right here, right here. Go ahead and get involved right now, cause like you have 9 hours left on like tomorrow. Everything kicks off, and folks are gonna be trading to win a free 5K funded account. You don't have to pay to enter. All you gotta do is trade and get the highest return on the account. It's a 100K account, so you got room to play around with. So if you were looking for a deal or a discount on a funded account, well, here's your opportunity. And then I also want to mention we have a email sweepstakes going on. I'm gonna put the link in the description for that as well. You can just put your email in, and then you'll be entered into a drawing for a free 10K funded account. So we're just giving out free money all month long. You dig what I'm saying? And the competition lasts about 2 weeks. Starts tomorrow, and then the sweepstake is gonna go all the way until Valentine's Day. We're gonna announce the winner on Valentine's Day. All right. I love y'all. Make sure you're kind to somebody today. I'm gonna catch y'all on the next one.